Hello, everyone. My name is Zulfiqar, and welcome to another episode of Income Investing. With me today is John Whitefoot with another exciting income pick. If you want to read more about what John writes on a regular basis, you can head to incomeinvestors.com, or you can find the link to the website in the description below. There are a large number of ultra-high yield dividend stocks being held back by temporary challenges. And for patient, contrarian investors, some of them are quite compelling. This includes today's income pick, Fat Brands Inc. They're traded on NASDAQ under symbol FAT. Fat Brands is a great high-yielding restaurant stock that weathered the 2020 health crisis better than almost any other restaurant stock. In fact, between March 2020 and June 2021, FAT stock ripped 1,972% higher. The company's stock has come under pressure again recently too, for a different reason, but Wall Street analysts think it will overcome this hurdle too. And they have a 12-month share price target range of $15 to $25 on FAT stock. John?
Yeah, thanks, Mo. Fat Brands, the word fat actually stands for fresh, authentic, and tasty. It's a global franchising firm that owns 18 restaurant brands, including Fatburger, Ponderosa, Twin Peaks, and Smokey Bones. More broadly, it has more than 2,300 franchise locations worldwide. Now, while most restaurant stocks were running for cover during the 2020 health crisis, Fat Brands was expanding its empire, and it's continued to do so. Most recently, in September 2023, Fat Brands announced that it acquired Smokey Bones Bar and Fire Grill for $30 million. This was Fat Brands' first entry actually into the barbecue category. Now, the company has since announced plans to spin off actually Twin Peaks and Smokey Bones as a standalone public reporting company.
And John, if you could elaborate on what kind of challenges this company is facing these days?
Despite strong growth plans, Fat Brands has recently faced some headwinds, and this has, as you'll soon hear, had a big impact on its share price. In early May, the company was indicted on 2 violations for arranging approximately $2.65 million in loans to Andy Wiederhorn. Now, Wiederhorn was previously the CEO of Fat Brands and is the current chairman of the board. He has, of course, denied all federal charges, alleging that he personally used $47 million of company money as his personal slush fund and tax evasion. Counsel for Fat Brands responded to the charges by saying these charges are, unquote, unprecedented, unwarranted, unsubstantiated, and unjust. Now, nothing has been reported on the matter since May, which suggests things are quietly going on and moving forward in the background. Now, despite this, investors have spoken loudly by running for the exits, which has seen Fat Brands stock trend significantly lower. And the current legal uncertainty is keeping, I think, Fat stock depressed. Though if you step back and look at the company's fundamentals, you'll see that the company itself is doing exceptionally well and it deserves to be on your radar.
SEC issues aside, I see that Fat Brands reported strong second quarter revenue growth.
Yeah, for the second quarter ended June 30th, Fat Brands announced that total revenue increased 42% year over year to $152 million. Now, the big increase was due to the acquisition of Smokey Bones back in September 2023 and revenue from new restaurant openings. The company has opened 45 restaurants year to date, including 24 that opened during the second quarter. And it plans to open, I think it's 120 new restaurants in total in 2024. Now, Fat Brands reported a second quarter net loss of a little more than $39 million, or a loss of $2.43 per share. And that's up from second quarter loss last year of 53 cents per share.
If you like what you see so far, check out incomeinvestors.com. And while you're there, you could sign up for our free special report titled 3 Income Stocks to Own Today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. And now back to the video. And John, this company has the highest dividend yield among restaurant stocks.
Yeah, every segment of the restaurant industry is performing well, way beyond levels of the 2020 health crisis. And that has allowed Fat Brands to continue paying one of the best dividends in the restaurant industry. This past July, it declared a quarterly dividend of 14 cents per share, or 56 cents per share on an annual basis. Works out to a current yield of 11.5%. Now, Fat Brands has actually increased its annual dividend for the last 4 years. We're coming to crunch time, though, if it wants the streak to extend another year. For that to happen, Fat Brands has to increase its payout in the fourth quarter of this year. In 2023, it paid 4 quarterly payouts of 14 cents per share. And so far in 2024, it has paid out 3 quarterly distributions of 14 cents per share.
And finally, FAT stock has a triple-digit upside potential?
Yeah, as for Fat stock, as alluded to earlier, it has not fared well since the company found out in May it was being investigated by the SEC for arranging $2.65 million in loans to board chairman Andy Wiederhorn. While Fat stock has rebounded off a 52-week low of $4.76 per share, it's still down around 13.5% year to date and 20% on an annual basis, at least of this recording. Again, the underwhelming performance of Fat stock has more to do with the current SEC investigation than anything inherently going on with Fat Brand's actual performance. Now, while there's no guarantee, it appears as though investors may have already punished Fat stock for the current investigation. It's currently trading hands near support level of $4.76 per share, with resistance at $5.24 per share. Now, if it manages to break that resistant level, Wall Street thinks it could soar to as high as $25 per share over the next 12 months.
John, thank you so much for your analysis. Fat Brands is a great restaurant stock reporting strong revenue growth, is opening new stores, and has strong new franchise activity. It has opened 45 restaurants so far in 2024 and plans to open over 120 new restaurants this year. It has signed over 180 development deals year to date, compared with 226 deals in all of 2023, bringing its current pipeline's development to roughly 1,100 locations. Despite the recent SEC investigation, management of the company believes there continues to be a significant opportunities for Fat Brands in 2024 and beyond with both its existing brands and acquisitions, all of which should bode well for FAT brand stock and its ultra-high yield dividend. That's it for today, and make sure to go to incomeinvestors.com now to get our free special report on 3 income stocks to own today. One of those stocks currently has a dividend yield of 12.7%. You can find the link to incomeinvestors.com in the description below. We'll be back with more income picks soon, so stay tuned. And in the meantime, don't forget to like this video and subscribe to our channel. Goodbye for now.